Welcome, dear traders. Our analysts are ready to share their red hot review of the US markets. As expected, Wall Street opened a new trading week with a bitter aftertaste in the light of Jerome Powell's speech at the Fed symposium. Stock investors cannot get rid of the headache amid the extremely hawkish Fed's agenda that is dampening the appetite for risk. No wonder Wall Street indexes closed in the red yesterday. The Dow Jones shed 0.57% on Monday, the Nasdaq closed 1.02% and the S&P 500 edged down 0.66% to close at 4,030 points. Despite the doom and gloom on Wall Street, the major indexes were able to recoup some losses in the New York pre-market. Despite minor gains in the pre-market, futures on a benchmark indexes eased the pace of growth. The S&P 500 is expected to trade in the corridor between 3,990 and 4,090 points today. Wall Street indexes extended their decline on a Monday as investors continued assessing risks and tried to predict the impact of the hawkish monetary policy and the prospects of a contraction in the Fed's balance sheet. Now the Fed is on the path to the fifth rate hike in 2022. Analysts advise market participants to tame their risk appetite. The market has been digesting mixed macroeconomic data in the recent weeks. Such metrics do not provide the full economic picture. Besides, they do not shed light on a slowdown in the global economy or prove cooling down in the US labor market, or do not confirm that inflation has topped out. Goldman Sachs recommends turning attention to commodities because the recession scenario is getting less realistic. On a Monday, the bank reported that commodity prices have plummeted, thus offering buying opportunities for energy and agricultural assets. As for the economic calendar, the market will get to know the Consumer Sentiment Index and the JOLTS job openings. The Consumer Confidence Index is expected to grow to 97.9 from 95.7. The JOLTS report could unveil that vacancies might have contracted to 10.475 million in July from 10.698 million in June. Awaiting the macroeconomic data, the stock indexes are gaining ground in confidence. The companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon and Meta traded in the green in the New York pre-market. Twitter stocks have come under spotlight again in the light of the news that Elon Musk filed another notice on a Tuesday to terminate his acquisition of Twitter. As a result, Twitter shares were down 2.5% in a pre-market trade. The stock market could find support from a report by large retailer Best Buy Car. The company reported a less than expected fall in the quarterly sales on the back of bargain prices. The shares of the retailer, which have lost more than 25% of their value this year, jumped 3% in the pre-market. Meanwhile, the US dollar index is still winning favor with investors as a safe haven asset. Today, it's retreating off the landmark level of 109, and the intraday corridor for the index is defined between 108.2 and 108.90. Following a rapid rally last week, the US dollar is losing its footing against the pound sterling and the euro. The prospects of a higher inflation push the ECB and the Bank of England into faster rate hikes. The futures markets suggested that the ECB will raise the key interest rate by 75 basis points next week. Moreover, the Bank of England might increase its key policy rate 4.5%, higher than the United States Fed next year. The euro, that represents a widely component in the basket of major currencies for the US dollar index, is taking a breather because the ECB policymakers are considering the option of raising the key interest rates by 75 basis points next month. Although the euro remains close to the parity level with the greenback, it's trading higher today. The euro also finds support from easing tensions in the energy crisis in Europe. The USD CAD pair is trading lower amid the pause in the greenback's rally. The currency pair is expected to trade in the corridor between 1.2980 and 1.3050. In anticipation of Canada's GDP data, the loonie depends on its American rival and the commodity market. The energy market is again vulnerable to the news that the Nord Stream 1 pipeline will be suspended for maintenance for the next 3 days. And in this context, anxiety in the energy market has reached a boiling point. Now the European Union authorities have to consider interference measures, which may include price caps and introduction of new principles of energy pricing. The prospect of drastic auctions pushed gas prices sharply down compared to their peak values. Oil prices also dropped off elevated levels reached on a Monday. Brent futures stumbled 4.32% to trade at $100.55 a barrel. WTI futures slipped 4.30% to trade at $92.88 a barrel. And the crypto market is trying in the red parallel to Wall Street. Bitcoin has been able to settle above 19,800, now trading at 20,300, and the token lacks bullish momentum to print higher highs. According to China analysis, the number of non-liquid Bitcoins on the market held in the wallets that are rarely spent or sold has risen by 73,840 tokens in the last week, the biggest weekly increase in more than 2 months. In addition, the number of Bitcoins held for more than a year has risen by an average of 54,300 over the past 4 weeks, the largest increase in about 4 months. China analysis report. Such data mirrors cautious market sentiment as investors are in the wait-and-see mood. At the same time, some analysts advise traders to buy tokens at bargain prices. Bitcoin is likely to hold in the corridor between $19,800 and $20,700 today. Trade with the profits with the InstaForex, and we will keep you updated on all market developments. See you online tomorrow.